morning. This is BloombergQuint Live. I'm Menaka Doshi.
And you're watching Indian Open. I'm Niraj Shah. Good morning, Menaka. Good morning, Ira.
Good morning, everybody. Good morning. These are our headlines. The US Federal Reserve, after an uneventful meeting, sticks to rates and also sticks to its guidance for a rate hike in December. Donald Trump is set to pick Jerome Powell as the next Federal Reserve chairman. That's a Bloomberg News report. A formal announcement still awaited. Vedanta and Power Grid are the two nifty companies coming out with quarterly earnings today. And shoemaker Khadim India's 550 crore IPO opens for subscription.
Well, a brief look at what the trade setup is looking like for the day today. We'll start off on a slightly somber note. Actually, not somber, that's too strong a word to use. A slightly tepid note, if you will. The handover from the US markets, while it may optically look okay, but the Dow was up about 125 points at a point of time, ending about 57 points down. So gave up some of its gains. The Asian markets too, a bit lackluster. So we'll probably have about 15-20 points in the red, though these moves could change either direction. So not really looking too much into it. But yes, we did end at record highs. There's strength in the Nifty Bank, more so in trade yesterday. So let's wait and watch if that continues over the course of the next 2 or 3 sessions. I think the standout feature of trade yesterday was the movement in the PSU stocks, not just the PSU banking stocks, but the PSU stocks. On a day when the broader markets didn't do as well as the large caps did, because the mid caps and the small caps were only 0.5%, a bunch of these PSU names, SCI, MMTC, Hindustan Copper, I'm not even mentioning Dredging Corp because that one was up on news, but all of these stocks were up and about. Very high volumes, reasonably okay delivery percentages as well for 1 or 2 of these. So fairly interesting moves there. Let's see if the broader market outperformance and more so the PSU lot continues or no. I doubt it will. Typically these stocks tend to flare up for a day at max 2 and then tend to give up. Let's wait and watch if this time it's slightly different. What could react though in today's session? Hero MotoCorp, and we'll talk about that in great detail, but a slight miss on the top line. Let's wait and watch what happens there. Might react a bit negatively. I think the one which will probably do really well is Ramco Systems, yet another mid-cap IT name that has come out with good numbers, a bit of a turnaround for them, good revenue growth, solid operational performance, quite frankly. I mean, their EBIT moved up to 12.3 crores versus a negative 3 crores, margins at 10.5% versus minus 2.6%. So Ramco had a fabulous day yesterday, yes, but just a blowout quarter. Let's wait and watch if there's some further reaction thereof. No. It is a weak set of earnings for Apollo Tyres as well as Camlin Fine Sciences. Actually, a fairly torrid quarter for both of these. There are some tailwinds to the tire space, but Apollo might still react a bit to the kind of quarter that has come out. Let's wait and watch. And then 2 or 3 other names. I mean, Solar Industries has bagged an order, 1143 crores. There is Crompton Greaves, wherein Franklin Templeton Investment Fund has bought some stake. And typically Franklin Templeton or a couple of other funds tend to evoke stock reactions. So let's wait and watch. So clutch of mid caps and small caps. I thought the 2 or 3 names that mattered in terms of trade reactions, Hero MotoCorp, maybe Ramco and a couple of others.
All right, I think the big talking point today will be the appointment of the new Fed chair. We were hoping it would come in tonight, but source-based information is already out, and really that's going to be the top story that gets discussed across markets. That and what the FOMC had to say last night. The US Federal Reserve says economic growth is, and I quote, solid. They said that for the first time in nearly 3 years. So that's an important indicator coming in from the FOMC. Meanwhile, it stuck to its target of hiking rates in December, leaving rates unchanged last night. But like I said, what's making headlines right now is the fact that President Donald Trump looks all set to name Jerome Powell as the next Federal Reserve chairman. And some have called that appointment boring. But we'll discuss if that really is boring or not. Then we've got news from the PSU space that came in yesterday. Dredging Corporation of India is one of the companies selected to kickstart the government's strategic stake sale process. After a gap of almost 13 years, they intend to sell all of their stake in that company. So we'll talk a little bit more about what Dredging Corp is all about. And then festive season is over. Auto sales have sputtered in October. Car sales growing in just about single digits. So we'll also discuss what that means for the auto industry. Ira?
Yeah, all right. So I think the news on the FOMC is mostly out in case you've missed it or haven't caught on to it so far. They've kept rates unchanged. There was no expectation of a change in rates. There was no expectation of a change in statement as well. There was no press conference this time around, so there was no reading between the lines either. A rate hike is still very much likely in December, barring any unforeseen weakness in the economy. That's the FOMC stake right now. They've made minimal changes in the economic outlook. The committee expects the U.S. economy to evolve in a way that warrants gradual rate hikes. That's the stance that they have maintained. They talked about the fact that economic activity is rising at a solid rate. Data has reflected that as well. The labor market continues to strengthen, and household spending is expanding at a moderate rate as well. Inflation, of course, remains below their target of 2%. It remains that way. It continues to be a bit of a mystery to all central bankers, including the Fed, as to why inflation is not accelerating faster along with economic growth. But as things stand, they are on course to not only hike rates one more time this year, perhaps follow that through with rate hikes in 2018 and continue the very gradual process of unwinding their balance sheet.
So I think 3 rate hikes is what was expected next year, 1 this year and 3 next year.
Yeah,
and
that's what the dot plot is saying.
And the December policy is when the press conference happens. So I suppose we'll hear from Yellen. Will that be her last one?
Feb is her, I think she retires in Feb, so I don't know if there'll be maybe one more.
Yeah. All right. But what grabbed headlines, besides what the FOMC had to say about the U.S. economy and had nothing to do with the U.S. rates, is that President Donald Trump plans to nominate current Fed Governor Jerome Powell to the top job at the U.S. Central Bank. 3 people familiar with that decision told Bloomberg that Trump is likely to make that announcement tonight. And here's Bloomberg's Kathleen Hayes with more details on that.
Another in a long line of reports, I think, that give us solid information on what Donald Trump, where he was heading, and now what he apparently has decided. No surprise, because he's been telling Bloomberg and others that he's been leaning towards Jay Powell. At least his staff has been telling us this. Yellen's term, Janet Yellen, the chair for nearly 4 years now. Her term is up February 3rd. And I think the question now everyone's asking, okay, so who is Jay Powell? Does he have the right stuff? So let's look and remind ourselves again just who he is and what he has done. Because he's studied law. He's not an economist, but he went right into investment banking once he got his law degree at Princeton, Georgetown Law. Dillon Reed, Bankers Trust, Carlyle Group, very esteemed names in this industry, and served in government after he got himself established in the financial industry, under Secretary for Domestic Finance under George H.W. Bush, among other positions, a Fed governor since 2012. So certainly this is a man with a long history. Now, the question is, what will he mean for monetary policy? He is seen, as many say, Janet Yellen 2.0, that he'll continue her monetary policy path. So let's just look at some of the aspects that he has said in his speeches. Fed's close to its mandates, certainly on unemployment, on inflation. They're far away, though, Mr. Powell. But this is exactly the kind of thing Janet Yellen says. Policy is currently very accommodative. It's appropriate to gradually normalize rates, which means raise them slowly. And below target inflation means you don't have to go quickly. You can have a lot of patience. So how is this sitting with people? Ethan Harris is the chief U.S. economist over at Bank of America Merrill Lynch. He gives a big thumbs up to Jay Powell. He spoke to our own Matt Boesler from our Fed team here in New York, and he said he thinks that Jay Powell will be a very good choice, that he has exhibited sound judgment, will continue to do that as Fed chair. Chris Rupke over at Bank of Tokyo Mitsubishi, I think, has some doubts that a lot of people are going to express as we go through this process now of Senate confirmation and more. He says, look, the Fed chair since the 1980s has become like the nation's chief economist. And the question is now, could a non-economist, when it gets down to it, go before Congress? Let's say there's a little opposition. Can they go up and defend policy? And how would Powell perform in a crisis? This is a question as well. And again, Senate confirmation will come soon. I think Powell's expected to get through it. He's already been confirmed twice by the Senate Banking Committee because he's had to do that twice to be a Fed board governor. But there's some big questions here still.
All right, that's Kathleen Hayes with Bloomberg, taking you through a little bit of information on who Jerome Powell is and what he's all about, his monetary policy stance. I like the way she said that the Fed chair has become a bit of a chief economist for the U.S. In India, I'm sure many chief economists would have also liked to be able to run monetary policy. But that said, here's some trivia. Okay, on what this big change at the Federal Reserve means. So this is going to be the 9th post-war leadership change at the Fed. Janet Yellen was the first woman to lead the U.S. Central Bank. And of course, as you already know, the U.S. is yet to see a woman president. If Yellen is not reappointed, which as we now know she will not be, she will be the first one to serve just one term since the year 1979. So ever since 1979, all Fed chairs have served 2 terms. Before Janet Yellen, it was Ben Bernanke. She's going to end at 1 term. Her term ends in February next year. The economy, you know where that is. Unemployment at 4.2%, 16-year low, 9th year of expansion. We already know that the US is looking at what the FOMC calls solid growth. The other frontrunners were Gary Cohn, current top economic advisor to President Trump. Then there was Kevin Warsh, former Fed governor. Jerome Powell, as we've already discussed. And then there was also John Taylor, and it looked like for the last few days a neck-to-neck race between Jerome Powell and John Taylor. Now we know that it might most likely be Jerome Powell. I'm caveating it till we don't hear from the president. 64 years old, a lawyer by training, a former private equity executive, favors continuing gradual interest rate increases, sympathizes with the White House's call to reduce regulation. He's a Republican, appointed to the board by President Barack Obama. He's backed Yellen's gradual approach. He's earned a reputation as a non-ideological pragmatist. I can't find more neutral words than that. And he's been rated neutral on monetary policy by the Bloomberg Intelligence Fed Spectrometer. So yes, they have a spectrometer, okay, that rates where people stand on monetary policy. And Jerome Powell has been rated neutral. He's never dissented on the FOMC since he took office in 2012. He was already the overwhelming favorite on websites, betting websites, that is. He will be the first Fed chair since Volcker in 1980s without a PhD in economics. For those of you who watch, economic policy very, very closely, I'm sure that's a talking point. His 2016 financial disclosure lists assets of as much as $55 million. So he comes rich. And then, we can talk a little bit about Taylor, though he now doesn't seem to be in the running.
I think the two talking points on this are going to be the fact that, he's sort of, he's pro-reduction in regulation on banks.
Taylor or Powell?
Powell.
Yeah.
But
so is Taylor.
So is Taylor, but why do you need to move towards that? So I think that is sort of the debate there, right? I mean, Yellen had taken a fairly neutral stance, and I think there are enough people out there who debate that this is not the right time to unwind, crisis-era regulation on banks, and that perhaps is the only reason why Trump is leaning towards him, because otherwise there is no distinguishing factor between him and Janet Yellen. From a monetary policy standpoint, they are very, very similar. And I think that
there is a distinguishing factor. Yellen is democratic.
I'm talking about the economics of them, not the politics.
But the politics of technically, everything, right?
But that's not exactly, which brings us to what Ishwar Prasad said. You should not have a very obvious and explicit political undertone to these appointments. Sure, there is always a political undertone, but there is a reason why Menaka did 2 terms. There is a reason why Alan Greenspan was sitting there across administrations, because if there is a problem with a Fed chief, yes, sure. If you think that they have underperformed in some way, sure. But that's exactly the question that Ishwar Prasad said. What did Yellen not do right? And actually,
how are you going to wish away the politics? President Trump has been Instagramming and saying,
I'm not wishing it away.
I find these people intelligent. And
he said that, right? He said that I want to make my mark. She's great, but you may want to make your mark. So that's the era that we live in. But for central bank purists, this is not the ideal situation. And there is still a possibility that Taylor comes in as the vice chair.
Stanley Fischer has stepped down, so there is the vice chair.
And the only reason I want to bring up Taylor is because there's that fabulous chart, which is so geekily fabulous, which we should
the Taylor
put up. Yes, the Taylor rule, which you should put up on the screen, and that of course suggests, and actually, jokes apart, that actually suggests a much higher Fed funds rate. And if there is Taylor in the mix somewhere there, he will have to, even if he's vice chair, undoubtedly the first press conference he will be asked as to why he now supports rates which are much lower than what the Taylor rule suggests.
But academic life is almost always different from life in running a central bank.
So there is an there's an ideological difference that he will have to explain.
But Ira, think about it this way, right? Look at the conflicting indicators at play here. Republicans would have always preferred a higher rate, always preferred a faster withdrawal from the easing process, right? I'm not saying at the risk of of destabilizing the economy, but they would have preferred that. So maybe Taylor plays into that feelings. Powell is the guy who gives the markets that sense of, hey, look, nothing's going to change in a hurry. Powell is the guy, as you pointed out, who's in favor of deregulation. And let me correct myself. Taylor's not necessarily in favor of banking deregulation, but he definitely has expressed his support in favor of tax reform in a paper he wrote for Stanford, I think earlier in the year, where he said that the economy now needs, fiscal policy that's supportive of growth, and tax reform is the first thing on the plate, which we know has been item number 2 on President Trump's agenda. Item number 1 being, medical care, which he was not able to reform. So this, in fact, I think the chances are that we might hear from the U.S. Congress tonight itself on whether they will push through some of the elements of tax reform. So it could be a Powell-Taylor Fed.
It could be a Powell-Taylor Fed.
And then that'll make it really interesting to read. Really, really interesting. Well, anyways, that's as much as we can talk about central banking this morning. I'm sure you'll see markets play out in some fashion or the other, but worth noting that the US markets were relatively unmoved by this, as were bonds in the US and bonds across the world, reacting very, very marginally, if anything at all, to this news in any fashion. So that's the story of who the next Fed chair will be.
And most likely we'll hear about that tonight as well. So some discussions on this.
The formal
announcement. Yes, indeed. Okay, but from really large global impacting macro news to some micro news as well. A couple of things that have happened in the domestic markets. One, the government is looking to exit Dredging Corporation of India. The centre may sell all of its 73% stake in the company. Samit Sarkar is standing by to tell us how is Dredging Corporation's financials stack up and whether it makes sense for some player to buy it in the first place. Samit, good morning.
Yeah, good morning, Niraj. So Dredging Corp is the largest and the only PSU dredging company in India, and being a government company, it is one of the most preferred dredging company for major ports and the Indian Navy. Now, if you see the financials of the company, the revenues and net profit have come off bit in the financial year 2017 when compared to financial year 2016, but margins have remained stable. And in fact, in the first quarter, margins have expanded by 400 basis points to 24%. Coming to the return ratios, the return ratios have remained subdued with return on equity of just 0.5 and return on capital employed and return on asset at just 0.3%. And when you come to the balance sheet of the company, the book value of the company is around book value per share is around 543, which is very high compared to the market price, which is around 700 rupees right now. And the total debt to equity was around 0.5 times. Now, first I'll see what are the risks that Dredging Corp has in the current market, and what are the weaknesses that Dredging Corp faces in the current market. Now, the majority of the fleet of Dredging Corp has crossed its useful life, that is, they are more than 25 years old. Now, the fleet also consists of smaller and medium-sized hopper, which have a very high operating cost. Now, if you see the high operating cost, the power and fuel cost and the maintenance cost consist around 46% of the total revenue of the company. Also, the company is now trying to revive their fleet to a higher hopper size, and for that they are relying on the dues to clear from the Setu Samudaram project. Now, they are expecting a cash flow of around 114 crore from this project, this thing. But the thing is, this dues are pending for more than 4 years, and still they haven't received this dues of around 114 crore. Now, these dues are receivable from Government of India, so the company is hoping that they will get this dues in near term. Now, if you see the opportunities of the company, the Ganga cleaning project could be one of the major opportunity for the Dredging Corporation of India. Along with this, the Sagarmala initiative is expected to drive the dredging demand in India to 2,400 to 2,500 crore by financial year 2030. Also, Indian third-party dredging market for financial year 2016 was close to around 1750 crore, and out of that, Dredging Corp had a market of around 700 crores, and they're expecting this market to increase to around 900 to 1,000 crores by financial year 2020. Now, if you see the risk, there is a consistent risk of foreign and private players entering this market. Along with this, frequent and expensive repairs of dredgers, because they have a very old fleet and a smaller and medium-sized fleet. This is also one of the risks that the company faces. Now, if you see the competitors, there are very few pure play dredging players in the Indian market, but in the dredging market, their competition includes the like of L&T, Adani, SR, and ITD Cementation.
So these are the guys that could likely be buyers?
they could be the buyers because they are not a pure play dredging company, so they could be the buyers.
Interesting. I think that they expected something. I mean, as of yesterday's price, they expected something close to 1,400 crores. So it's not very material from a government finance point of view. But just the fact that they're willing to sell all of their stake in this company says something. Though this was, I think, the company that was on the list suggested by the Niti Aayog, and the cabinet had approved it. So it's gone through all the hoops. But nonetheless, the fact that it's a full stake sale and not doing bits and pieces, might be interesting to note.
It'll be interesting to note. I mean, this is more from a divestment news perspective as opposed to what happens to dredging per se. I was just looking at what the company's done recently as well. I mean, the government somewhere last year or in the current calendar changed the policies wherein earlier dredging used to get contracts on a nomination basis. They have now moved to this tender contract basis. So the competition has increased manifold for dredging. But having spoken, Somit spoke extensively about the old fleet, so on and so forth, everything, they still managed, even though it was Bangladesh, but Dredging Corporation managed to get an order in Bangladesh. So there was this first international order that they got as well, which probably showed, if it's not happened at, a peak in margins, it's probably a victory of sorts for an Indian PSU lagging on almost all counts and still bagging an order comparable to international PSUs. So some feathers in the cap. But yeah, this is more a divestment news, not really what happens to Dredging Corp. I mean, the market has shown what will happen. The market is excited. But yeah, let's wait and watch if indeed they find enough buyers for a 1,400, 1,500 crore or an EV basis, maybe slightly more kind of valuation.
Yeah, I don't think Ira is moved when it comes to government finances, disinvestment revenue, fiscal deficit.
No, I think they've done a fabulous job with divestment this year.
No, they have so far, yes. Thanks to all the insurance IPOs, I would imagine.
Not
right?
just
and
that, they've timed them well, they've done it smartly, they've picked the right targets. I think the gentleman heading the divestment department right now has really strategized this very well. The ETF will open. The first couple of rounds of ETF were great. I think it's opening on the 14th or something of November.
Yeah,
early November. I don't remember the exact date, but it's early November. That ETF is incidentally going to have public sector banks for the first time around, so you've timed that well as well.
Yeah.
You've got the recapitalization done. Now you go to market with an ETF which has, I think, a 24-25% weight of financials. So I think they're doing a fabulous job. I don't know the exact numbers and we should pull them out, but I think they've taken out a significant part of their 74,000 crore target.
They have. That's what I last read as well, that they've taken out a significant part. And, whilst this is it's not material in terms of amount, I think in terms of intent, if this expresses 100%. The government's desire to move forward in the next year and a half on full divestment of some of these companies, that could be nothing but encouraging, right? So
absolutely. And they haven't waited till the last quarter, which they very often do in divestment.
Yeah. And then it all piles up, and then they always run out of time in March, and the
markets are not ideal. So they've done this well.
And the markets are supportive for all kind of divestment proceeds as well. It's perched at all-time highs.
Two really big insurance IPOs.
Yes.
Huge. So big ones at that.
Yes.
Okay. Ira, auto.
All right, auto sales, you've got most of the numbers. Yatin is standing by. It looks like there was some petering out of the momentum. Yatin, you want to run us through the numbers?
Yeah, but it is inaccurate probably to assume that, the numbers are petering out. Of course, we had a very large base last time around, because of which we are looking at growth, which is there, but, which has clearly slowed down. But if you look at the management commentary, be it Maruti and be it Hero MotoCorp yesterday, everybody is expecting good momentum to happen in the second half of this financial year, which means that clearly there is no sign of slowdown. Yesterday, Mahindra & Mahindra increased its guidance for industry growth as far as tractors are concerned. Of course, it's not material upside to the previous guidance, but from the earlier growth level of 10 to 12%, they have increased it to 12 to 14%. So the industry optimism remains as far as the second half is concerned. But if you look at the overall matrix, companies like Maruti have delivered growth of close to 10% on a year-on-year basis. Of course, good order books at Baleno and Brezza have been a changing point for the company, because of which we have seen good growth. Of course, this time we had seen Ciaz as a model, see sales decline of nearly 35%, and that is something concerning to the analysts. If you look at Mahindra & Mahindra, the automotive sales were down marginally by 2%. Tractor sales surprised on the negative side. We had a decline of close to 11% on a year-on-year basis. Slightly on the expected side, but we have a decline coming in because last year we had the festive season in the same period, because of which the base was high. As far as Royal Enfield sales are concerned, 18% growth was registered there on the back of healthy order book that the company has. Ashok Leyland, of course, slightly lower than the market expectations. We have various issues with the GST regime, and probably because of which the commercial vehicle players are not doing well. So only a 3% growth registered for Ashok Leyland. And TVS Motors came out with a number late evening. They also have delivered a growth figure of close to 3%, largely to do with the fact that we have seen a strong double-digit growth as far as the scooter segment is concerned.
All right, so that's what we have from auto sales. We're awaiting sales numbers from Hero Moto, but the country's largest two-wheeler maker didn't quite deliver a very encouraging set of earnings, did they, Yatin?
They have delivered a satisfactory set of earnings, Menaka. If you look at the revenue growth, it was 7.3%. But this is largely to do with a GST adjustment. Remember, their Haridwar plant used to get excise benefits from the government of Uttarakhand. But because of phasing out of excise duty benefits because of GST, they have only accounted for 58% of those benefits, and the balance 42% of the GST related adjustment has not yet been registered on the books because they are awaiting some notification from the government of India with respect to the excise duty benefits that they enjoyed in the state of Uttarakhand. Now, if you look at the net profits, they were flat at 1,010 crores. However, if you look at the margin improvement, that has been significant on a year-on-year basis because most of the analysts were working with a decline in the overall margins because of higher raw material cost. But the company has been able to deliver a margin figure of close to 17.4%, and EBITDA was also up at close to 1,456 crores, marginally higher than the Bloomberg poll. Now, if you look at the company commentary, it has been quite encouraging. They are expecting the second half to be good on the back of new launches and also the kind of ramp up that we could see in the key export markets like South America. Of course, there will be an analyst management call later in the day in which there will be more clarity as to how the management really looks at demand and pricing moving forward.
All right, thanks very much for that, Yatin. That's the auto story. Stocks didn't fare very well yesterday, did they?
No, they didn't. By and large, maybe the street was a bit disappointed. Maybe the commentary helps today, let's see. But yeah, all the stocks came off. Small miss on the top line for Hero as well. But as Yatin said, maybe the market could take heart from Maruti's and Hero's commentary. Though yesterday was not exactly the picture perfect day for the auto names. But that's all that we have on First Word today. But stay tuned to BloombergQuint because we talk about a lot of other facets. Are there more legs to the rally? We asked Dr. Dugal of Motilal Oswal. Auto sales have sputtered. We speak to an ancillary maker to understand the demand situation. Hemant Luthra of Mahindra CIE will join us to talk all about whether tractor demand could come back or no, and what will it impact, how will it impact auto component companies. And we'll speak to Vivek Gambhir of Godrej Consumer Products later on in the show about their number.
They had a good quarter.
Yep.
They had a really good quarter. Double-digit growth in some of their categories. So, I mean, good quarter.
Should be interesting to see whether the commentary lasts for the next few quarters as well, or whether this is some bit of restocking impact that came in. I think a couple of companies did refer to that, but let's wait and watch. It'll be an interesting conversation. For now, though, a full tilt towards today's trade. A quick check on the derivative space to start off with. Navneet Saluja is standing by with their Finno setup. Navneet, good morning.
Hi Niraj, good morning. Well, the cues are positive if you look at the data points which we got from yesterday's trade, but Bank Nifty is the one which is hogging all the limelight. Yesterday, for the first time in last 5 to 6 trading sessions, I saw a lot of open interest build up coming up for Bank Nifty. This is Bank Nifty where open interest went up by nearly 21%, telling you there were some fresh long positions, whereas for Nifty, open interest went up by only 2%, but Bank Nifty will be in focus as today the weekly options contracts, they expire. If you look at the maximum open interest concentration, it looks like that the expiry may take place in that range of 25,000 on the downside to about 25,700 on the upside. The good news also was that the volatility index cooled off after gains which we saw for the 2 straight sessions. So India VIX closed above the mark of 12, but still it was down 2.5%. In terms of put call ratio for both the benchmark indices, Nifty as well as Bank Nifty, we saw the PCR inching up, telling you there was more put writing in the system yesterday. And clearly, if you could just pull up the most active strikes yesterday, it was the 10,400 put. Remember, we surpassed the mark of 10,400 and there was a lot of put writing seen. Almost 11 lakh shares were added. And if you go by the premium, which is almost 97, it tells you till the time index trades above the 10,300 mark, the put writers are safe there. What are the FIs doing then? Well, we clearly saw a big buy figure coming in the cash segment, but positive cues from the options space as well. though they increased both their longs and shorts in the index futures, but look at the options data. They bought more of calls and they wrote more of puts, which is a very, very positive sign. In terms of active stock futures, yesterday we saw fresh long positions coming up for stocks like V-Guard, Bharti Airtel, as well as IDFC Bank. Significant amount of OI buildup was seen there as well. And in terms of fresh shorts, you had a couple of counters which were weak yesterday. So the likes of Hexaware, Escorts, that stock was down nearly 3%. And even from the auto space, you had Eicher Motors, which tumbled almost 4%.
Well, let's wait and watch what happens to some of these. Abhijit Pathak, Director at Definite Solutions, joins us on the show. Thanks a lot for that, Navneet. Abhijit, let's start off with what have you seen on the auto pack? Most of them, if not all of them, came off from the highs of the day. The numbers probably responsible for that. How would you trade some of these?
Yeah, I'm mostly looking at Maruti because that was quite bullish for the last 10 days. But yesterday it has stalled near, in fact, last 2-3 days it is stalling near 8,300. And there is a lot of call writing near that level. So 83, 8350 might be a resistance for the stock, I presume.
Okay. What about the index itself, Abhijit? A big flare in trade yesterday. We may start off slightly soft. What would you do?
The Nifty and Bank Nifty have broken out of the range which was there for the last 2-3 days, no doubt. But then there might be a drift down today, which is called a pullback. So any pullback should be used to go long. And as long as Nifty is above 10,400 and Bank Nifty is above 25,300, these dips should be used to go long. Okay, dips to be used to go long. So that's Abhijit Pathak's base strategy. Is there a particular option or option strategy that you would have, Abhijit, on either the Nifty or the Bank Nifty? Bank Nifty is, I mean, there is a weekly expiry today, so it's a bit risky to give a call at this stage without looking at what happens intraday. But then on Nifty, as I said, when it comes to 10,420, 4,003, one can buy a 10,500 call with a stop loss of 10,400 on the Nifty. Okay. And a target of 10,500 on Nifty. Specific stocks, Abhijit? I'm still bullish on Sun Pharma. It gave a sharp rally 10 days back and then has given a pullback, and it is near support now. So as long as it is above 545, it can be bought with a stop loss of 540. And one small rally can come to at least 555. And if it crosses 560, that will be a big breakout in Sun Pharma. Fair call. Abhijit, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. Let's move on and take a look at how our commodity market's trading in the session today. Pradeep Pandya joins us with that and to take the show forward. Pradeep, good morning. Anything that stands out?
Good morning. Well, all eyes on dollar actually after the Fed meeting. And if you look at it, Fed has not really done anything and dollar has softened a bit. While analysts actually expect that there would be a December rate hike, though by then we'll also have a new Fed chair, and markets are more or less discounting the appointment of a dovish Fed chair, so to say. But today is going to be interesting. The announcement will come today and also a BOE rate decision will come today. We'll see what happens to the sterling really. Will it sell off after the recent up move or no? If it moves up further, there could be more correction in dollar, and that will be interesting for all the currencies. So that's the key driver. Well, gold has inched up a bit because dollar has softened, and if you look at oil, that is the other important commodity we have been watching. Well, US crude inventories in fact fell despite rise in production, so that could be a reason why crude has been holding on to the gains at higher levels. If you talk about other commodities, well, nickel has posted the biggest two-day advance, so that is one interesting commodity. In early Asian trade, though, steel has moved up, but other base metals have more or less softened. Okay. Let's take a quick check on how the Asian markets are faring for the benefit of our viewers who are tuning in right now. We'll start off on a slightly tepid note. A mixed bag, actually, to be honest. The rest of the Asian markets have been fluctuating. Our markets, about a 17-odd point downtick is what the SGX is showing currently. So maybe we'll start off on a slightly flattish note in trade today. I think the key will be, Pradeep, really to figure out what happens to some of the PSU names in today's session, whether the momentum that we built, whether that can continue or not, because it was not restricted to banking. If anything, it actually moved on from banking to, I mean, maybe Dredging Corp was an excuse, but Dredging Corp, Shipping Corporation, MMTC, Hindustan Copper, it wasn't a sector-specific thing. If there was a sector, it was the PSU sector,
which actually did rather well in trade yesterday.
That's true. So I think, what happens to Shipping Corporation or Steel Authority or NMDC, where real action is actually expected. While there is a lot of speculative activity also in stocks like MMTC, STC, even IFCI, MTNL, but government doesn't really have a firm plan there. So that part is probably more speculative than real.
Let's wait and watch what happens there. I think we'll keep a keen eye out for that and keep a keen eye out on what the result reactions would be as well. A clutch of companies came out with numbers, and Darshan is here with all the details. And Darshan, well, yet another day seems like wherein green is overtaking red ever so slightly.
Yeah, I think that's right. And I think it's the mid caps that are doing much better than the large caps, because Hero came out with an inline set of numbers. But the smaller companies, be it TCI Express or a Heikel or an ABC Bearings, they came out with a strong set of numbers. But the weaker ones became Apollo Tyres or an Apar Industries, some music broadcast. All the larger companies not coming out with a very strong set of numbers. So we'll take few of them. Let's talk about TCI Express. That came out with a very impressive set of numbers. If you're looking at the revenue, that was up 10%. The net profit was up almost 30%. The margins improving to almost 9.7% versus 8.9%. So strong set of numbers. And what other thing that benefits is that the Mahindra Logistics IPO is currently on, trading much cheaper, and then Mahindra Logistics has an ROCE of almost 40% compared to Mahindra Logistics 30%. So TCI Express again will be in focus. Ramco Systems came out with a very strong set of numbers, could probably be the stock of the day. 4% up revenue on a quarter-on-quarter basis. Net profit there's a net profit of 6 crores compared to a loss of 3 crores, and also from a negative EBITDA of minus 2.6%, they moved to a plus 11%. So pretty much very good set of numbers. ABC Bearings came out with a strong set of numbers. Revenues were up 20%, profit up almost 40%. Even if you're looking at the EBITDA margin, 16.2% versus 15.4%. So strong set of numbers. Hexaware also very strong set of numbers. On a quarter-on-quarter basis, revenues was up close to 1%. Net profit up 16%, even margins coming in at close to 16%. Now, the management has reiterated the upper end of the guidance of 15 to 16% year-on-year growth on a dollar terms. And despite that, fourth quarter will be weak. It's the third quarter for Hexaware this time around. And weak numbers, Apollo Tyres, very weak set of numbers, despite revenues moving up 13%. Profits was down almost 50%. Margins coming in at 10.5% versus 14%. And Mahindra Holidays came out with a weak set of numbers. Revenues were down 6%. Net profit was down almost 4% for them, and even margins coming down to 22.2% versus 23%, 10% drop in EBITDA. So these were the weak numbers that you had.
Thanks, Session, for all these details. And Niraj, if you look at it, unlike yesterday, what you have today, the relatively bigger and significant companies, Hero Moto or Apollo, is either yellow or red. But what is it green really is a segment that you track very closely, mid-cap IT, Hexaware and Ramco.
I mean, it's just something that's propped up this quarter, Pradeep. I don't know if this will last or not. Yesterday, experts that we had mentioned that it's not really about mid-cap versus large cap. It's very, very company specific. But frankly, I mean, with due respect, but if you just look at what's happened in IT, though I must say Tech Mahindra came out with a fairly decent set of numbers too. But if you just look at what's happened to IT this time around, the mid-cap companies have all stood out. Now, whether this is a flash in the pan or whether this can last remains to be seen. Management commentary suggests that it's not a flash in the pan, so we'll get to know. But suffice to say, a bunch of these mid-cap ITs, you could count Hexaware as a small exception, but I think operationally they too have done reasonably okay. But yeah, Ramco Systems in today's session, I mean, it was a fabulous quarter that they've come out with. A bit of a turnaround, as Agam was speaking about it in the morning. But you have to give credit to some of these companies for having managed the cost pressures really well this quarter and come out trumps on the operational front. For a lot of these companies, even on the revenue front.
But money is actually moving into this sector, looks like, because if you look at the way TCS has done over the last 3-4 days, when we really need support from these so far neglected sectors, it's actually happening.
So valuations are probably in your favor, right? More so for mid-cap IT, which are trading at 8-9 times, and if you can grow, I mean, a 4% constant currency growth in this quarter, and you don't extrapolate it completely, but if a stock can grow about 10-11% in the year, you're trading at 8 times, and 10-11% revenue terms, profit terms could be even higher. It could be a very, very interesting thing that could happen for some of these. So let's wait and watch. Anyways, let's try and figure out what is it that our research team members have for us in today's session. Waiting by in full strength to talk about all the key numbers, all the key stocks in news that have happened in today's session as well. A couple of companies come out with results too. So let's talk about all of that and more with our research team. Jayesh, Shraddha and Nikki, all three of us with us. Okay, Shraddha, let's start off with you. The stocks and news, I presume.
A couple of them starting with JP Associates, where the RBI has approved a bond exchange plan and the bond holders have also agreed to further extend the deadline to November 30th. So we could see some reaction there. Bharti Airtel, which said they will transfer the optical fiber business to Telesonic Networks. Now, the overall consideration for this has been capped at 5,650 crores. Kolte Patil also will be in news on the back of a Mint report which says that it is in talks with PE investors to set up rupees 500 crore realty platform. A couple of stocks in the back of order wins is also what we are tracking. NBCC, where they've won an order of about 400 crores. You have Solar Industries, they've bagged an order of about 1140 crores, and GOCL, which has received an order worth 322 crores. Two key bulk deals that we're watching out for. Crompton Greaves Consumer, where Franklin Templeton has bought 0.7% stake, and you have JB Chemicals and Pharmaceuticals, where Ashish Dhawan, investor, has sold 2.3%.
Shraddha, I have to interrupt you there because there's big news that we're seeing on the Bloomberg television screen. As I'm reading out, the US FDA has lifted the import alert, 6640 on Vizag Unit 2. Darshan is ready with us. Darshan, what does this mean for Divi's?
It's big news. That means, the problem that Divi's has is now solved. They had two import alerts. First of all was 6640, which was the main one, in which, there was issues as far as Divi's was concerned. The second was 9330, which actually was obstruction of some, if the US FDA went there and they were obstructing it. So that was lifted earlier. Now this is the main import alert that has been lifted for Divi's lab, which means now that Divi's can again resell products from their Vizag Unit 2. They have been totally cleared. Initially, they had an import alert, then they got a warning letter because they believe there were some data integrity issues. A few months ago, there was this re-inspection that happened in which, Divi's, again, there was this Form 483 with certain observations that came in. But now it seems that the Divi's has put it on the exchange that the US FDA has cleared this warning letter as well as import alert, which means from now, Divi's can go ahead and again start exporting to the US market. Extremely positive news for Divi's, should react much positively today.
Okay, Darshan, I'm guessing you would want to stay on because Surjit Pal is here with us as well. But Surjit, just an initial question to you. You've heard the news. How big an impact do you think this is for Divi's?
I think earning wise and top line wise, it will, in immediate to medium term, it will not have any big impact. The reason being is that they were anyway, the key products are basically exempted. So I don't think top line and bottom line it will have a huge impact in that company.
Okay, Surjit, in terms of, how much was because of this import alert, what was the impact on the top line, you said? How much was stopped because they were being allowed to, sell some products. So how much will
exactly.
that?
So I think maximum 5% could be.
Okay.
Top line will be coming over there.
How much percent of a move do you expect on Divi's? Do you expect the counter to react much positively to this, or this has been priced into?
It is more of a sentiment value, or sentiment hangover will be lifted.
Okay.
So that will be the positive thing for the company, and that might drive the price by say around 100 rupees more.
Okay, and which were the key, APIs that they were supplying from the Vizag Unit 2, which were under import alert? Do you have any idea of that?
No, I don't have any idea.
Okay, many thanks for that, Surjit.
Welcome.
For us, Darshan.
So basically, it means that Divi's now is free to export anything from the Vizag unit. I expect the counter to open with a very big gap up opening, because this was the biggest news that was impacting Divi's and impacting Divi's. They were not able to sell to the US market. So sentimentally, a big overhang goes from Divi's. And along with this, I think the entire pharma sector will be in focus today.
Okay. So let's wait and watch. We've seen a string of these pharma companies getting some bit of approvals here and there. Surjit Pal saying that he didn't expect it to be a really big mover. But let's wait and watch as to what happens on the counter early morning in trade. This will be amongst the top stocks in news, along with a few result reactions. But a quick check of a couple of companies which will come out with numbers. So Nikki and Jayesh for that. Nikki, to you first.
So we're expecting good set of numbers coming in from Vedanta. We're expecting a 32% growth in the top line, and we're expecting a number of close to 21,005 crore as compared to a figure of 13,639 crore in the base quarter. EBITDA is expected to grow as much as 27% at 5,927 crore as compared to a figure of nearly 4,600 crore in the base quarter. However, margins are expected to be almost flattish at 28% as compared to 30% in the corresponding quarter. PAT is expected to go up as much as 79% year-on-year basis. What we do expect is we're expecting good volume growth coming in for all the three segments, be it in terms of aluminium, zinc, or for that matter power business. Also, we're expecting higher LME prices. This combination of this is expected to aid the top line growth of the company. Also, two quick issues that have been solved and which would lead to improvement in volumes will be the ports outrage at Jharsuguda smelter. Now that's an issue which is behind us, and also there is a ramp up of Talwandi Sabu plant. There was a fire accident in the previous quarter which took toll on the production of the company. Besides that, good show by Hindustan Zinc, which is also a subsidiary of Vedanta, is expected to aid the earning growth for the company. However, a higher input cost is expected to have some bearing on the margin. We'll keep an eye out for EBITDA per ton of aluminium business, and along with that, the power business for that matter.
Thanks a lot for that. Nikki, some news bits on your screen before I go to Jayesh. Bajaj Auto numbers are out as well. And while the numbers on the face of it look to be in line, but the exports number is a healthy 15%. So this could be an interesting one to watch out for. A bit later on, we'll talk about this as well. But Bajaj Auto, one more set of auto numbers. October total sales 7% higher, 3.82. So not a bad month, but the month which is in line with what the street was working with. So watch out for some of the two-wheeler companies as well. Bajaj Auto has come out. We'll get the numbers of some of the others. TVS Motors yesterday, I think, came out with about a 3% number. So and that too, I presume, was largely what the street was working with, maybe slightly off, but Bajaj Auto seems to be exactly in line with what the street was working with. Okay, Jayesh, very quickly, what are we watching out for from Power Grid?
So Niraj, we are expecting a strong quarter backed by the regulated equity income that Power Grid gets. In terms of numbers, we are watching out for 18% revenue growth, 15% EBITDA growth, and 14% net profit growth. Some of the factors that we'll be keeping an eye out on will be that the commissioning is expected to come in the range of about 7,000 to 8,000 crores, and we'll be also watching out for the management commentary. Segmental performance, as far as that is concerned, transmission and consulting revenue growth is expected to be at around 20 to 22%. Neeraj, some of the other reports that I was reading from brokerages, most of them have a buy rating with a target price in excess of 250 for the stock. Current market price is about 210, and in the last 6 months, the stock has practically done nothing. So it will be very interesting to watch out what really comes out.
Yeah, let's wait and watch about all of these stocks. Thanks a lot, all of you, for joining us and giving us that perspective. Well, it's 8:45, so almost that time of the show wherein we get you the top technical recommendations. So we've discussed a lot of things fundamentally. Divi's remains a top draw, a lot of other mid-cap names as well. But our technical experts and derivative experts are with us. It's also the Bank Nifty expiry in today's session. So let's start off with Chandan Taparia. Good morning, Chandan. Thanks for joining. What are you recommending on the key indices today, the Nifty or the Bank Nifty? Is there a strategy?
Yes, very good morning. Recently, the market is continuously making high tops, high bottom formation. After a consolidation of 3-4 trading session, again it continues positive momentum and made a new lifetime high of 10,450. At the beginning of series, we have seen jump in the put call ratio, and the option beta is continuously shifting higher support base in the market. So now till it holds about 10,380, we are expecting this rally to extend towards 10,550 kind of level. Our last trading session, we have seen fresh put writing at 10,400 strike, where open interest added near to 11 lakh shares. That indicates that now 10,380 is likely to act as a support. However, maximum call is intended 10,500, but small unwinding and shift in 10,700 could even propel the market to higher level. So as of now, one can continue to be with the long position. Earlier, we have recommended to be with the bull call spread by buying 10,350 call and selling 10,500 call. Traders can book in the same and now can continue to go with the naked 10,000 by paying the premium to play the positive momentum of the market. Okay. Talking about the Bank Nifty index, finally after a long consolidation of last 3 months, it has given the breakout of 25,198. It made the 25,198 on the 2nd of August at the time of RBI policy. So it's a very critical or crucial level to start the next leg of rally in the Bank Nifty index. Now till it holds about 25,198, we are expecting further 500 to 700 points move in the Bank Nifty index. It can head towards 26,000, 26,250 kind of level. For a weekly contract that is going to expire today, traders can trade with 25,500 call, because in this series, in this week, Bank Nifty is up by around 2.5%. Volume weightage average is near to 25,150. We have seen fresh put writing in most of the strike from 25,200 to 25,500, while fresh call writing is happening at 25,700. So expecting it to find support near to 25,250, 25,300, while it can extend its move towards 25,700 kind of level.
Okay. Samit, you have trade in Muthoot Finance and Sun TV. What's your call here?
Yes, after a consolidation of nearly 1.5 months, yesterday we saw a decisive breakout in Muthoot Finance. The way chart structure is shaped up now, it suggests that the stock has a potential to move higher in next few days. Target would be around 544. It can be bought in any dip. Stop loss can be placed around 492. Second buy would be on Sun TV. Last Friday we witnessed a decent price volume breakout from falling trend line, along with a decent long build up in this particular stock. Day before yesterday also we witnessed some kind of addition in this particular stock. So looking at the overall structure, we expect this stock to head towards 892, which is our near term target. It can be bought with a stop loss of 827.
Okay, so that's the call here. Sun TV and Muthoot Finance, both are buy calls. Now joining us on the show is Kunj Bansal, ED and CIO of equities at Centrum Wealth Management. Kunj, before we talk about markets, actually, DVs is the top story at this hour that we are tracking. What's your call on this stock?
So, haven't been very specifically tracking this company. Neither do we have research coverage on this. So not really any concrete view, but in terms of longer term performance of the company, as well as the really long term 3, 5, 6, 7 years track record of the management delivery, if we see there has been a consistent performance.
Okay, Kunj, good morning and thanks for joining in. Niraj here. What's your overall assessment at these high levels? Are you investing fresh gunpowder into your schemes, or are you holding on for some correction?
Yeah, so it's a very difficult question to answer. I wish I had a straight answer to this question, but to distribute your question in few parts and trying to answer each of them, the inflows from our investors, from our clients, we are still seeing in the market, and to that extent, whatever inflow comes into the offshore fund advised by us or into the PMS assets, we are investing, number one. Number two, the older investments, yes, we are continuing to hold. Number three, specifically coming to market view, I think market is in a stage wherein it is partly being driven by liquidity, but at the back end of it, the liquidity will always follow the expectation of growth. And that is something that is there if we take a slightly longish view of two quarters plus. It probably may not be there in specific terms in this quarter or maybe next quarter, but if we average it out over the 4-5 quarters, we clearly have macroeconomy numbers also will be significantly seeing improvement, resulting into the improvement in the earnings growth of the company also. And that is where I think market is continuing to give a positive momentum, and there is no point trying to resist the momentum of the market. When we invest in equity, we know it's a risky asset class. So to that extent, we should be ready for any corrections. But waiting for a correction, as they say, more money gets lost waiting for a correction than in actual correction. So to that extent, I think one should continue to invest in the market.
Fair call. For people who want to invest or trade and are looking for some opportunities, it's time for our special segment, Bloomberg Edge. Jayesh Khilnani should be joining us in just moments from now to talk about that. But I think before we do that, we have the management of Hexaware, I'm told, which have come out with numbers. Decent business momentum. The question mark only is whether the valuations already discount that business momentum or not. Because while they reported a 0.4% quarter-on-quarter growth in constant currency terms, margins did beat estimates. R. Shri Krishna, CEO of Hexaware Technologies, joins us right now on the show. Shri, good morning. Thanks so much for joining in on BloombergQuint. This is Niraj here. How would you sum up the quarter? The revenue growth, constant currency, okay, but operationally seems to be a fairly strong quarter for you.
Yes, certainly was a great quarter operationally, right? And even the revenue growth, while the numbers you said are correct from a quarter-on-quarter perspective, look at our Y-on-Y numbers, it's almost 14% growth. And that's very strong momentum. And this quarter-on-quarter growth is basically on the back of multiple extremely high growth Q-on-Q. So we actually feel very good about where our future is headed, because this quarter-on-quarter issue was well known and well planned for. We had guided the market to it. And from an operational and a margins perspective, the fact that there were headwinds in terms of wage hikes, there was some calendar headwind, and we overcame that and through other operational efficiencies and were able to do better than planned was something that we are very, very happy about.
So were you really able to gain fresh business or win new clients that kind of contributed to this quarter? Because you did have a headwind that you're talking about with two clients actually ramping down.
Right. So we did win new clients, but those were not revenue accretive for the quarter. What really, helped us do well was the fact that outside the top 5, the rest of the client portfolio is doing very well. And if you look at our next 5, the 6 to 10 clients is growing at 10.5% a quarter. That was the sequential growth. If you look at the next 10, 11 to 20 is growing at 12.6% Q-on-Q. So the portfolio in general is performing very well. And there were new clients. Like I said, we announced deals from new clients of 43 million from 5 clients for the quarter. But that's not revenue accretive yet. That'll result in the revenues going forward.
Okay, Sri, I think if I just look at the verticals which did well, I think infra did an exceptionally strong growth for you. BPO continued to grow at a rapid pace. Are these the legs that will take you higher? And what's the mood looking like for the rest of the year?
Well, and these two have done very well, but there's also been a third business that has consistently done well for us, which is our largest business, which is application development. So you look at our ADM business, from a Y&Y growth perspective, it's at 15%, so very, very, very robust. And we believe these businesses will continue to do well. But in addition, we also announced actually last quarter that we are kind of launching a new service which we think will be an important growth driver for our future. This is customer experience transformation, essentially robotic customer experience transformation. The good news for us is that we already announced in the deals we announced this quarter, there's already actually 2 deals that are in that area of using things like chatbots and AR and VR to help our customers transform how they interact with their end customers.
Mm-hmm. Well, on the margin side, now you are more or less back where you were last year. What's the guidance? But do you think 16% or around that is what you'll sustain?
So actually, we are better than where we were last year. So our guidance at the beginning of the year this year is that our full year margins for this year will be the same as the full year margins for last year. Which means, and hence we basically said our revenue growth and our margin absolute growth will be the same. So we said revenue growth 14 to 15%, and margin will also grow at 14 to 15%. And that was the revised guidance we gave last quarter. The earlier guidance was 10 to 12%, and we revised it up to 14 to 15%. What we said yesterday is that on the revenue, we maintain our guidance, but we've said we will be at the upper end of that guidance. On margins, we've said actually we will beat that, and we've upped our guidance to say our margins in absolute terms over last year, EBITDA over last year in absolute terms will grow between 16.5% to 17.5%.
Okay. Thanks a lot for that, Sri. Good having you today, and all the best for the fourth quarter as well. He's our, of course, calendar year performance, quarter 3 fairly strong. Kunj, what has stood out for you in mid-cap IT? A bunch of these stocks have done really well, but anything that stood out for you? You heard the Hexaware management as well. I'm sure you looked at some of the other results too.
Yeah, so what is happening in IT, particularly mid-cap IT, is that the stocks have been underperformers for almost 2 years, actually 2 years plus now. The growth rate expectations have been brought down by the analysts, by the fund managers, and the numbers have been in line with that expectation. There has not been any positive surprise, nor has been any negative surprise. But because of the market continuing to go up, money inflow continuing to come in, obviously every new inflow of money looks for undervalued and under-owned opportunities, and which is where I think some bit of interest has come in the mid-cap IT sector. Obviously, when the interest does come in, interest does look for justification and reasons also. So the justification is that the reduced growth rates have bottomed out, and if at all the growth rates are to move up only from here, will not further keep going down. And that's the reason there has been performance. There have been 1 or 2 off cases wherein there has been a very significant performance also. So that's the overall sense on the mid-cap IT.
Okay, Chandan, quickly, if you could take us through your top picks for the day.
Yes, we have seen the buying interest in Bank Nifty index, and most of the PSU banks are doing well. So I have selected to go long on SBI. It has formed a pole and flag pattern. It really dwelled to 350, then witnessed a small decline, so forming a positive price pattern. Expecting it to further move on higher side because of built-up of long and the put writing activity. So recommending to buy with a stop loss of 310 for an upside target towards 338 to 340 level. Second trade is buy on Muthoot Finance. On last trading session, it has given a triangle breakout. We have seen a surge in the delivery as well as trading volume. Because of this pattern, the stock can hit to recent highs. Recommending to buy with a stop loss of 500 for an upside target towards 530. Apart from that, we have positive stance on selective metal counter. Most of the metal companies are doing well, and here I have selected to be with the Hindalco by bull call spread as it's moving after a consolidation of last 7-8 trading session. As per its price behavior, we are expecting it to head towards 285, 288 kind of level. So recommending to be with bull call spread by buying 275 call, sell 285 call. In the entire strategy, risk is only 3.5 rupees. While if it moves on higher side,
stay on Chandan. We are hitting the pre-open rates. We'll just revisit this bull call spread of yours in moments from now. But this is what's happened in the market in the pre-open session. Don't look at these early rates. Divis could well have a really big tick up on the upside. But let's wait and watch if indeed it is 10% or otherwise.
It's a new swing high.
Yeah. Sorry?
New swing high, because last time it came to 1,000 and retract.
Okay, so new swing high in technical parlance for Divis as well. But let's wait and watch. Let's give this some time, and let's see if it's a 10% or some other number for Divis Lab. The market by itself is starting off, looks like starting off on a good note, but again, the SGX was not indicating this, so let's wait and watch. Some other specific stocks, Hero MotoCorp should be reacting to numbers, should come up. Couple of mid-cap IT names like Hexaware as well as Ramco Systems. I don't know if they start reacting so early on in the pre-open rates, but yeah, some upsides for both of these. Not as much for Ramco, but Hexaware about a couple of percentage points. Solar got some big order. It's a very illiquid stock though, wouldn't believe it will react. And State Bank of India, I think, wow, okay, reacting all right, 19% higher. And State Bank of India, Chandan Taparia believes there's some more upside in store for SBI. Let's wait and watch if indeed this one has some further upticks in today's session or no. The other PSU banks also will be in focus.
Yeah, some of the mid-cap results, ABC Bearing, for example, where profit is up by around 43%. If you could look at that one, and also Adore Fontech, where profit has gone up by 52%. Well, these stocks haven't really quoted as yet. Hexaware, if we have a look that we were just talking about, Adore Fontech, you have a quote here, up 6% in today's trade. Well, we talked about Solar. Let's look at GOCL as well. It used to be Gulf Oil earlier. GOCL has also received an order for 322 crore from Coal India, similar order actually, and this stock is up around 3%. JP Associates and Kolte Patil, two more mid caps we'll be watching for in today's trade. JP Associates received RBI approval for bond swap, is up 1.5%. Kolte Patil 1.5% earlier as well, looking at a private equity deal.
Okay. 902. By the way, the currency would have started. Just quickly bring up what the rupee is doing in the session today. 64.53. So some more strengthening for this one. It continues. Let's wait and watch where it settles down. But 902. Let's get a quick sense on what the top brokerage calls for the day is. And Motilal Oswal has initiated coverage on Rain Industries with a bull case price target of 615 rupees. Saloni is waiting by with the details. Saloni, morning.
Well, absolutely, Niraj. Motilal Oswal has initiated a coverage on rate industries with a buy rating and a target price of rupees 362. Now, they see an upside potential of 33% in the company on the back of calcine pet coke demand, as the production of CPC is hurt in China. Now, as far as the company is concerned, it operates 3.5 million ton cement plant in southern India and has been investing in high growth projects. Now, they also decided to set up a plant of 370 kiloton per annum. Now, they believe that there's a dual benefit for the company that is playing out. Firstly, the demand is picking up, and on the other hand, the supply shocks are driving CPC prices. Now, in terms of financials, they believe that Rain Industries generates strong free cash flows, which is helping them to delever their balance sheet. Now, they expect volume, EBITDA, net profit to grow at a CAGR of 4%, 24% and 50% respectively over current year 16 to 19. Now, the stock has returned over 370% on a year-to-date basis, and it has been re-rated by Motilal Oswal on visibility on margin expansion and growth. And lastly, as you mentioned, the bull case target stood around 615 rupees, Niraj.
Okay, thanks for all these details. And now markets are still settling down while we move on to the IPO market, where the IPO fever caught on to Khadim India as well. The shoemaker is looking to raise around 550 crore rupees and will see one of the private equity investors, Reliance Alternative Investment Fund, exiting the company via the offer. Somit Sarkar standing by with more details. Somit.
So Khadim India is looking to raise as much as 543 crore at a price band of 745, 750. At the upper end, the market cap of the company would be close to 1,350 crore rupees. Now, through this IPO, the Reliance Nippon's Reliance AIF will be completely exiting and selling its share for 439 crore, while the promoter will be selling only 54 crore rupees of shares. Now, the company is also raising 50 crore rupees as fresh issue, of which 40 crore will be used for debt repayment and 10 crore for general corporate purpose. Now, moving on to the business of Khadim India. Khadim is second largest footwear brand in India after Bata, and it has two business segments, that is retail and distributors, and it follows a asset-light business model with 80% of its retail stores are on franchise basis. Now, it also has two manufacturing facilities in West Bengal and 4 distribution centers across India. Now, moving on to the financials and peer comparisons, the company's revenue and net profit grew at a compounded annual growth rate of 10% and 36%. Now, compared to Relaxo, the revenue grew at a slower rate while net profit grew at a faster rate. Now, comparables for Bata India were not available because they had changed their accounting period. Now, if you see the EBIT margins, it was subdued at 8% because of its asset-light business model. Now, if you see the return ratios of the company, the return on equity was at 16%, while return on capital at 25% and return on asset at 7.5%. Now, this compared to Relaxo was subdued, but compared to Bata, it was good. On balance sheet side, if you see, the company's book value per share is close to 107 rupees, while total debt is 118 crore rupees. Now, this will reduce by 40 crore after listing, and the debt to equity currently is at 0.6, which will come down to around 0.3, 0.4 post listing. Now, if you see the valuations of the company, it is the share prices are available at a cheaper valuation compared to Relaxo and Bata, and all three fronts, that is price to earnings, price to book, and market cap to sales. Finally, coming to what brokerages are saying, now of the 4 brokerage notes, only 1 has a neutral rating, while other 3 has a subscribe rating. Angel Broking has a neutral rating because it thinks that the current valuations have priced in all the positives for the company.
Thanks a lot for that, Somit. So that's one more IPO that is kick-starting in today's session.
So you have 2 already, so 3 in total.
Yeah, and a large one starting off Monday as well. Kunj, any of the recent IPOs or the ones that are on right now that you would be enthused about?
Yeah, so amongst the recent IPOs that have gone and are currently on and will be coming in, our research team has worked on a lot. So out of these, clearly the Reliance Nippon, which closed some time back, we found it attractive and recommended subscribe to our investors. But the recent 2 IPOs, the Mahindra Logistics, I think today, which is closing, and the Khadim, which is opening today, we haven't found as attractive. Because of clearly the financials, if one looks at both these companies. In fact, in case of Mahindra Logistics, our research team also looked at the 5-year performance of all Mahindra Group stocks and found that those performances are in the 5-year period. Different Mahindra Group stocks have given a paltry returns of 50 to 100%, whereas any good performing stocks in the market in the last 5 years bullish phase has given 200, 300, 400, 500% kind of return. So despite the other existing stocks as well as this IPO coming from a very high pedigreed group, the return to shareholders haven't been anything great. The other thing which applies also in case of Khadim is that all these issues are coming more as an offer for sale, and offer for sale at such expensive valuations for relatively weaker financials doesn't really interest us, because what is happening is some other shareholder is taking money, is effectively selling it to you very expensive. Even if I have to buy an expensive issue and if the money is going into the company by way of primary issuances, I don't mind, because I'll be the ultimate shareholders of the company, and having given money to my own company at an expensive valuation belongs back to me. But that is not what is happening in case of Khadim, as you yourself were just saying that one of the PE funds belonging to Reliance Group is exiting fully, and so are the promoters also, I think, selling about 54 odd crore worth. So it doesn't make sense for me as a new shareholder to give a very significantly expensive valuation to an old shareholder for a financially weaker business. And if we look at the Khadim also in terms of its growth rates and in terms of its return ratios, profitability hasn't been great. So to that extent, while we have not significantly said avoid on Khadim, we have said it's an expensive valuation, and so is the case with Mahindra Logistics. In fact, if we look at the longer term, last 6 months, 1 year also, while almost all the issues have seen a very good amount of anchor investors and in some cases over valuation, but we have seen wherever there have not been financials, those stocks are currently trading at significantly lower than the offer prices. So one or two names that immediately come to my mind are companies like S Chand, companies like CL Educate. So these were the issues which were from the weaker companies at expensive valuation and offer for sale, and the combination of all these three certainly doesn't interest us.
Okay, Gunj, we'll leave it at that. Thanks so much for taking the time out and speaking with us on BloombergQuint. Look forward to having you more often on this forum. Well, that's Gunj Bansal with his thoughts. Minutes away from market open. Before we get in some final thoughts from Chandan Taparia as well, just a quick check on and give you a brief about all that you need to know to stay ahead in the session today. And some results that have come out and have delivered a good quarter: TCI Express, Ramco Systems, GE Power, Heikel, ABC Bearings, Ador Fontech and Hexaware have reported strong numbers.
Well, a weak quarter for the names like Apollo Tyre, Max India, Music Broadcast, Apar Industries and Mahindra Holidays. All these stocks are reacting negatively in pre-open.
Power Grid, Vedanta, Glenmark and Ujjivan and Edelweiss are amongst others to come out with numbers today.
Well, IPOs also in focus, with Khadim issue opening today for subscription, while those of Mahindra Logistics and New India Assurance are fully subscribed already.
Motilal Oswal initiates coverage on Rain Industries with a price target of 362, which is a 33% upside from the current market price.
Franklin Templeton buys into Crompton Greaves Consumer. Ashish Dhawan exits JB Chemical, while Porinju Valiat buys stake in Khetan Chemicals.
Okay, so that's essentially all that you need to know to stay ahead in trade today. But it's 9:11. I think one or two stocks that we need to mark, we'll mark them of course on market open, but Divi's Lab, certainly Darshan's assessment came out to be true, because Divi's Lab is starting off on a really good note. The pre-open rates have settled at about 10% higher. Suffice to say, it will start off on a very good note. Let's wait and watch what happens post that. Samit, any pharma name that you would trade? I don't know if you'll get a chance to trade Divi's, quite frankly. It will start off on 10% higher. Or anything else that suits your bill?
See, Niraj, as a disclosure, day before yesterday, we had recommended Divi's Lab and call option to our clients, and that particular trade is still on, so probably we'll get a decent appreciation there. Apart from that, we have been liking Vocard since last 3-4 days. The kind of price and volume activity that we saw last Friday, it's quite encouraging. The stock has managed to give a decisive breakout from recent congestion zone. However, in last 3 days, this stock has been consolidating in a range, but 640, 645 seems to be a very strong support. And from here on, we would expect a decent appreciation as far as Vocard is concerned. So we would trade with a positive bias in Vocard also, and we expect this stock to head towards say 685, 688 over the next few days. It can be bought with a stop loss of 627.
Well, Niraj, I don't understand pharma as much as I understand PSU banks, but that story might as well, get repeated. Going by what so far I have heard from Darshan and the other analysts, it's a very, very big move. So it's possible that even after a gap up, there could be follow-up buying.
Sure, there could be.
Above 1,000 mark.
Yeah, but I was just wanting to know if our experts would recommend having the gumption to go out and buy a divis after this uptick that we see in that stock. So that remains the key to watch. Let's wait and watch for that.
Well, let's see. Markets have settled. There are quite a few stocks that are off to a good start. You have Religare Enterprises moving up again. Okay, Solar Industries is actually up 6%, and Rain Industries 4.5%. Dredging, by the way, is up 3.5% more.
And GVK is down 4.5%. Pradeep.
Yeah. So second lower circuit.
Second lower circuit for the day today. Nevertheless, we'll watch out for some of the other names too. There's a small stock in which I think Purinjaveliar's firm bought a stake, so we'll flag that off as well. But it's just about a minute to go for market open. Let's get you the top trading call from our experts. Chandan, to you first. Your top call for the morning?
Yes, we have selected SBI and Muthoot Finance, so I'll prefer to be with SBI. Because of price pattern, we are looking for a target towards 340. One can buy with 310. Those who are option lower can continue to be with 320 call to play the positive momentum with limited risk.
Okay, so even the option or the future for State Bank of India is Chandan Taparia's top call on the Bank Nifty expiry day. Samit, very quickly, your top call for the morning.
I'll certainly go with Muthoot Finance. The chart structure is quite encouraging. The kind of volume activity that we saw yesterday that indicate that the stock is likely to see a decent upward rally. So I would go with Muthoot Finance.
Financial names that both our experts are recommending. Just very quickly, a 15-second call, Samit. Anything on the index that you would do today?
So, see, within indices, if I have to trade anything, I'll certainly go with Bank Nifty. It has been underperforming of late, but the stock has managed to give a decisive breakout. So we would see this index heading towards at least 25,650, 25,700.
Fair call. Gentlemen, Samit as well as Chandan, many thanks for joining us today and giving us your thoughts. But 6 seconds away from market open, we will have a start which is, mixed bag, if you will. I think the broader market trend could well continue in today's session too. So we're starting off on a very, very flat note. Look at the Nifty. No movement there. The Nifty Bank 2 lying absolutely flat. But the broader markets could be interesting. Bring up the mid caps and the small caps. Those could be interesting. Let's see if after a slight bout of underperformance yesterday, whether they can do better than the large caps. About 0.25% higher for the mid caps and the small caps. So not a bad start. The Nifty heat map should come up on your screen. Though the stock of the day has to be divis. But let's just first bring up the large caps and see what's happening. Is there a pharma flavor to the Nifty today? Yes. Aurobindo, Lupin, Sun, all of these are starting off well. Remember yesterday's session, some of these stocks were down. In today's session, maybe aided by Divi's news, Pharma is really the big one. On the losing side, Tech Mahindra is reacting negatively to its numbers, about 1.5% lower. SBI is starting off marginally off as well. So you're not much to choose from. Let's bring up Divi's Lab on the screen. That is really the man of the match of sorts in today's session. Looks like 15% higher now. 138 and counting, 18% higher. So this is a big mover, big piece of news, of course, that's come out for Divi's as well, and that clearance really aiding the move today. So yeah, I'm glad that BloombergQuint's research team's assessment, Darshan pointed this out, that it could be a big start, and that's certainly proven to be true. Let's try and bring up some of the other names, 2 or 3 that I wanted to bring up. Ramco Systems. Ramco Systems is that mid-cap IT name that came out with, I thought, a really good set of numbers. And let's see if that is reacting. 2% higher for that one. Hexaware, an okay quarter. The management confidence though out there. The commentary was okay, but the management fairly confident of quarter 4 too, living up to its billing. That's about 3.5% higher, so not bad going for this one either. And Rain Industries, on which Motilal Oswal has come out with with the target price much higher than the current market price. That one is starting off on a good note, about 7% higher. But certainly seems to be a day about mid caps and small caps and stock specific moves, because the large caps on the indices are not doing anything. Pradeep, anything that you are catching?
You have Dredging Corporation moving up another 10% in today's trade now. So after yesterday 20% circuit. Also Shriram Transport Finance has moved up by 5%. You have Marksans Pharma and Idea, interestingly. So telecom stocks remain in favor. Idea moving up by around 3.5% in today's trade. But what happened to some of the smaller stocks that we were actually talking about? Let's have a look at those as well. Khaitan Chemical, JB, and also Crompton Greaves Consumer, where we have reported deals. Well, Khaitan not yet has not yet traded. JB Chemicals is up 2% here, while the Crompton Greaves Consumer is up just 1.25%. So not much movement there.
Well, and not much movement in the index too, but if Gautam Duggar is to be believed, valuations are rich but not euphoric. The question though is whether the rich but not euphoric scenario that we have leaves some more upsides for the markets, and if there are reasons to back those upsides. But he joins us right now on the show to talk about that and more. Gautam, thanks so much for taking the time out and joining us on BloombergQuint. What's your assessment? Looking at the earnings season so far, looking at all that's happening around us, your assessment is that the valuations are not euphoric, and do the earnings qualify some more upside?
So, good morning. So far the earnings which have come are largely in line with expectations. We've not seen any major disappointments banning one or two companies. So when I look at my universe of companies, out of the 190 that we had estimated for, almost 90 have reported. So if I look at the numbers excluding OMCs, the numbers are in line with expectations. Some of the disappointments are there. Obviously, in private banks, we saw a hauler of a number from Axis Bank. We saw some disappointments coming from IOC in Tata Steel. But keeping that aside, sectorally, if you see, cement has been better than expectations. Auto is progressing in line. Consumer has been actually, while the numbers, headline numbers are in line with expectations, the commentary has been far better. So, and obviously, we've seen telecom numbers. There seems to be an expectation that things are bottoming out even there. So it's a mixed bag actually, but on an aggregate basis, so far the number seems in line with expectations. If you keep aside the volatile, companies like OMCs.
So does that leave room for upsides? I mean, my basic question then would be, if this quarter essentially turns out in line with estimates, are you factoring in much better earnings growth quarter 3, quarter 4?
Yes, obviously, because in Q3 and Q4 you have a low base of demonetization, plus a lot of GST related disruption would have settled down, and there is an expectation that demand pickup has happened and economy itself is bottoming out. I mean, we publish a monthly economic activity index which is proprietary. My economist publishes it every month. Yesterday he released it for September. He's saying Q2 GDP looks like 6.5% kind of a print one would see. Obviously some buoyancy coming in from early festive season this time, but be that as it may, you had 5.7% print, you're looking at 6.5%, and hopefully if you go by the commentaries across auto, consumer companies and some of the other consumption pack, you're hearing that rural seems to be coming back into the vogue now. Commentary from Lever, commentary from yesterday from Hero Honda, all of that is pointing towards rural demand buoyancy slowly coming back into the system. So that obviously leaves me a bit optimistic for 3Q and 4Q. And you also have a low base, which is well factored in. Secondly, on valuation, the point that you raised, today, I mean, one of the point that I was mentioning, valuation you have to look at in the context of where the cost of equity is. There's no denying that valuations are not cheap. They're obviously rich. You have a 20% or 23% premium versus your long period averages. But you have a cost of capital which has gone down. And secondly, when you look at absolute valuations at the extremes, today you're at almost throwing out of the earning cycle. Then looking at the absolute P in isolation will not give you enough insights. So you have to marry that with cost of capital, you have to marry that with the earning cycle and expectations of earnings pickup. While there has been an expectation for last 2-3 years, it has not materialized. Today things seems to be slightly better than what those things were a couple of years back.
So what kind of earning expansion do you foresee in third quarter and fourth, where you are optimistic and you actually feel that something that didn't happen last year and last to last will happen now?
So one of the things I look at is the progression of the earnings estimate. So this is one quarter where we did not cut our earnings estimate on Nifty after a long time. When we did our preview 15-20 days back, our earnings estimates for Nifty were unchanged. We are expecting an EPS of around 486 rupees for FY18. We have an expectation of 600 rupees for FY19 and roughly 690 for FY20. While it is too far-fetched to look at FY20, but I think if an EPS of 600 is on the annual and there is confidence, this quarter obviously the expectation themselves are very muted because of GST, because of so many other things which are happening. But if one gets a confidence going into the third quarter that earnings are still meeting the estimates, then the confidence on 600 number for FY19 EPS will go up, and people will also start looking at FY20 after that. So at 23, 24 times trailing EPS and 20 times forward EPS, you're obviously not looking at cheap valuations, but if you go by the history, if you look at the past cycles where we were a couple of years back or 8-10 years back, your absolute peak PE used to be 24-25 times when the bond yields were much higher. Today your bond yields are much lower. So to that extent, the support from cost of capital having gone down, it is there. We are not expecting any meaningful decline in interest rates from here, maybe 25 bips, 50 bips here or there. But it seems that the cost of capital going down, that equation has played out. From here, the re-rating has to be led by the earnings expansion rather than multiple expansion. So we are clearly, as far as re-rating is concerned, the P multiple led re-rating largely seems to be done. What remains to be seen is now how the earnings pick up. And if that picks up, then obviously these valuations can clearly sustain. I'm not talking about the support from the liquidity, which has been one of the key factors which has been responsible for driving the market where it is right now.
Correct. So looking at the earnings and valuations, do you buy more of the same, or you will pick some of the under-owned areas like PSU banks, telecoms?
So I'm more inclined towards buying stocks where the downside is actually limited and you have a reasonable upside. So, I mean, last 1 week, 2 weeks after the announcement of bank recapitalization, you have seen that some of the sectors which were not in favor, they've come back in vogue, whether it is PSU bank, whether it is telecom, some of the utility companies, some of the pharma companies. You're seeing almost bottoming out of pharma sector as well. While the news flow may not improve anytime soon, but you are seeing that the stocks are not reacting to the incremental bad news. In fact, one of our reports that we published somewhere back in June or July in the contrarian theme, we had mentioned that pharma seems to be a sector where contrarian investing can be done. We like Coal India, we like ONGC, I like Bajaj Auto as well, which has been an ignored stock for the last 2-3 years. That also seems to be recovering as far as the numbers are concerned.
The export number was reasonable today.
Yeah, so export and even domestic seems to be stabilizing. So clearly our preference lies with companies having earnings visibility from a structural point of view. So sectors like private banks, sectors like consumer discretionary, sectors like auto, that remain in favor. But tactically, from a near-term point of view, I think even sectors which have been hitherto ignored and where you are seeing some improvement on the underlying fundamentals or at least on the news flow. So there is a room for valuation catch-up. So that's what we have seen after the announcement of bank recapitalization.
Well, Divi's is a case in point today, now up 16% by the way. So it went up to almost 20% high. Just a couple of other stocks that I want to mark. Dredging Corporation is now up 16% by the way. So after a 20% up move, another 16% up move in the session today. A lot of people, Gautam, would not understand. I don't know how much of a coverage you have here, but an announcement about a complete stake sale by the government got Dredging Corp really excited. Got the whole PSU pack excited. Some with reason, as Pradeep was mentioning. There are mentions of they looking to get it divested. Some because of just the whole momentum. What happens here? How does an average investor play this out? Because there are people who 3 years ago invested into a clutch of these PSU names, have not been able to get out of them. They're finally seeing some fever return here. How do you play this?
So I think it's very tough to play, and obviously it's beyond the capability of an average retail investor, because it requires tremendous focus on daily news flow, which is very tough to have. The best thing to do for this investor is basically to deploy that capital in a mutual fund and trust with the professional investors. They can do a far better job of tracking the news flow and making sense of it, because these are very unpredictable things. What one can perhaps do is, one follows a disciplined approach. You combine valuation, you combine fundamentals, you combine management quality and stick with that rather than chasing news flows and chasing the theme of the day. Because in the long term, that will matter far more than, getting excitement out of these short-term themes.
Yeah, well, that's true. Okay, so let me ask you, you kind of briefly mentioned things that you like. Of late, we've seen a clutch of names which have had a good rally, but the earnings momentum is so strong, really moving well. Rain Industries is a case in point. Your team has come out with a note today. The target price substantially higher. After Rain Industries has rallied probably 200% or 300% or maybe more. Now, where are these pockets?
So, it's clearly a bottom-up idea where stock has done well, but it's still trading at a sub-single-digit PE. You still have a decent earnings and EBITDA growth, which is there. Underlying fundamentals seems to be better today. With the demand supply being in favor. So clearly there will be pockets of ideas. They're very rare today, given that mid caps are trading as a pack at 40-45% premium to large cap, and we have not seen this kind of premium for a long time. Even if there was a premium, it used to be very flitting. You didn't see that premium lasting for a long period of time. So clearly the opportunity to hunt for ideas in mid cap is limited today vis-a-vis 12 or 18 months back. But having said that, you still have enough sectors where there is a possibility of earnings pickup and where mid caps or even large caps for that matter. When I say large caps are trading at a discount, it clearly means that there are pockets of sectors even within Nifty, even within BSE 100, where stocks have not done as well as the rest of the sectors have done. So that is where I think the delta will be earned, or whatever you call it, alpha delta. So point is, one has to be very focused on earnings. One has to be very focused on where the earnings are picking up, because we are coming out of 8-9 years kind of a flattening earnings zone. So earnings CAGR has been 4%. We had a 2003 to 2008 episode where earnings CAGR used to be 25%. Last 8 years has been a 4-5% CAGR, right? And if the market expectations or whatever estimates are there, if 14-15%, even if 10-12% comes through, then there will obviously be reasonable number of stocks where you will still have earnings re-rating, where you will still have decent money to be made. But clearly, the job is not as easier as it was, say, 2 years back.
Okay, fair call, Gautam. We'll leave it at that. Thanks so much for taking the time out and joining us in our studios, and look forward to have you more often on this forum, of course. Well, that's a very interesting chat with Gautam Dugal, and he clearly believes that with the cost of equity having come down, the scope for the markets to move up is there. Valuations are rich, but nowhere euphoric. Let's wait and watch if earnings oblige. For now, though, with the markets looking flattish but specific stocks doing okay, we slip into a very, very quick break. But up next, we speak to a bunch of corporates. Auto sales may have sputtered a bit, but will they stumble, or will tractor makers make a bit of a comeback as well? We speak to a premier ancillary maker. Hemant Luthra of Mahindra CIE joins us in just moments from now. We discuss consumer demand and earnings with Vivek Gambhir of Godrej Consumer Products a bit later on in the show.
Welcome back. You're watching Indian Open. We've got a whole host of corporate leaders lined up to speak with you about their companies and the state of the economy. Let's start first with Mahindra CIE. It's an auto component manufacturer that earns more than 50% of its business from India. We're going to talk to Hemant Luthra about the outlook for the auto space and what he thinks will be the industry's fate from here on. Good morning, Mr. Luthra. Thanks very much for joining us here on BloombergQuint. Can I start with asking you a very quick first question on your prognosis for where you see auto sales head from here on, and therefore what your outlook is? And then I want to get into a couple of granular questions on, what the outlook for M&M, one of your key buyers is, and then, we'll talk a little bit about the other sectors in the industry.
Menaka, if you can ask, good morning, but if you can ask them to turn the volume down, it'll be helpful.
I will, all right. I think the message should have reached.
We are very positive. We've had okay. We are quite optimistic because we've had a great quarter. The year-on-year growth has been 52% in the consolidated business in India, which is what I think you're talking about. We've seen something like an 87% growth in revenue and 64% growth in EBITDA. And we think that this momentum will continue. Mahindra is doing well, tractor demand is holding up, Tata is doing well, and everything that's happening in Europe is doing fine. So I'm very happy to go into granular stuff that you talked about.
All right. M&M itself, let's speak of that first, has improved its growth outlook for the farm equipment segment from 10 to 12% to 12 to 14%. What kind of traction would that mean for your company?
See, Menaka, if I look at Mahindra CIE, it's a consolidated business in which I think M&M is less than 15% of our total revenue, and so is Tata. So between the two of them, they don't add up to more than 20%. Having said that, they're both very important customers, and we are seeing the fact that the stamping business is getting greater demand, where we supply bodies for Bolero and the other cars of Mahindra. We've seen demands for the Tata Motors, different products go up, and the gears demand where we supply gears for Mahindra and Tata, that has shot through the roof because we are now having to invest more capacity. So I can't complain at all. Fortunately, we are also hedged by whatever is happening in the two-wheeler industry because of the growth in demand for and that is feeding the Billforge subsidiary. But since you asked me about M&M, good luck to them, more power to their elbow, because it's showing up nicely in our demand outlook.
Okay, that's well put. Mr. Luthra, good morning. Let's talk about geographies, because if we just look at what happened to the recent quarter numbers that I've looked at, Indian organic growth was strong. I think the European operations got boosted by new orders as well. Which geography is looking strong, and what will drive growth over the course of the next couple of quarters, or maybe the next 6 quarters?
See, I think the growth that we are seeing coming is both organic from India. The gear growth in Italy is strong because what we are supplying to Caterpillar and others. The truck market in Europe has come back. We are hedged in both truck and passenger. So maybe the volume growth will not happen that much in Europe, except they still consider 3 to 6% pretty good. We like to see much more than that. And I think what we'll also see is the fact that in India, we'd expect the two-wheeler industry to grow 12%. The MHCV and the CV industry is growing nicely. So I don't see any clouds on the horizon. In fact, we see great opportunities, because there's this new law which says that the companies that are not have had fiscal prudent management, many of them are up for sale. So the customers are getting nervous, and those customers are moving their product to us, both in India and in Europe.
Are you referring to Amtech?
Organic plus inorganic opportunities plus. I'm not referring to anybody specifically, but yes, anybody who's in trouble. There are more than one who's in trouble. We are seeing customers divert their orders to us.
Okay, fair call.
I don't think it's fair to talk about any one particular company.
Okay, but would it be a string of pearls strategy of sorts that you would initiate or have, Mr. Luthra, or would you look at making substantially large acquisitions?
Now, substantially large means what? Because if you look at it and say that the last one was 200 million, can the next be 300 million? Yes. Okay. We've already promised the market that in order to ensure the same high degree of corporate governance that everybody expects of us, we folded all our forging operations in Europe and India into the CIE forging operations and put them all under the Mahindra CIE corporate roof. We've told the market that as soon as Brazil, Mexico, and China from the CIE stable of forgings are back in the fold, we will put them under Mahindra CIE also. So that is either organic or inorganic, you can call them what you like. There are many more bill forges around this world at this time. There are many entrepreneurs who are owned partially by private equity, and they see it as a great opportunity. That Mahindra CIE's philosophy is that we'll acquire them 100%, we'll give them stock in the parent, they'll participate in the growth of the parent, and we invite the promoter always to have skin in the game and stick in the and continue to manage the operations. So there are 4 or 5 of those people who we're looking at. There are some distressed assets we are looking at, and then organic growth is happening quite nicely. So I can't complain about the prospects.
I know Niraj and Ira may have more questions to you about the existing business. The question that interests me the most is how you're positioning yourself for this electric vehicle revolution. What does it mean for your company? The opportunity is much bigger in the Western countries right now than it is in India, but it will slowly become big in India as the government makes this big push towards electric cars and electric vehicles. Is that a space that you're looking at with a degree of excitement or trepidation?
Not trepidation at all, because while I admire the vision about all cars on the road by 2030 being electric, there is a lot of collateral work to be done. I've just come back from Scandinavia to take a look at how they are managing their migration to electric vehicles. 1/3 of all parking stations on roads and parking lots have to have charging. Every port has got a standard charging thing in Denmark and Scandinavia, but those ports are not standard across the world. Some are 48 volts, some are 64 volts, so there's no standardization there. To generate that much electricity, you also have to have coal. In the case of Denmark and Sweden, they don't have that problem. They have got enough hydroelectric power. But having said that, we endorse the push to electric, and we don't worry about it at all, because in the total portfolio that we have, and this is the important piece, less than 9% of Mahindra CIE's domestic sales go into what is the internal combustion engine. People forget that even electric vehicles will need transmission, they'll need hubs, they'll need body parts, they'll need all kinds of stuff. So in the case of Mahindra CIE, less than 9%. If you look at CIE, Mahindra CIE Global, okay, is less than 20% that goes into internal combustion engine. So being able to migrate, considering that we are the only ones, I think, just now of players of this size, a couple of $1 billion, $1.5 billion in India, $3.5 billion CIE, which are multi-technology. We moved from stampings and we moved to composites and plastic. When we found the forgings were getting too heavy and we wanted to lightweight, we used tubular structures to replace forging. When we wanted to do less machining, we did stuff which was related to substituted forging with casting. So there is a huge benefit that we have because of our technology center both in Spain and in India. And we don't worry about this at all, because just now it constitutes a fraction of our turnover. And I don't see that changing very much. Having said that, CIE is already starting to supply components to Tesla. Tesla has not been good news this morning. The number Tesla 3 is not taking off as rapidly as they would like. But let's see whether China can do all the vehicles by 2030 and India can do everything by 2020. These are good statements of intent, but we are prepared for anything.
A quick follow-up question, very briefly. I can see why you're describing this not to be a threat to CIE, Mahindra CIE, but do you see it being an opportunity? Like 5 years down the line, would you say this could be a substantial growth driver in your business, new areas of business to do when it comes to electric vehicles? Is there any way you can quantify that for us in any fashion?
Absolutely, Menaka, because electric vehicles will have to be lighter weight. Okay. So we are already looking at the next acquisition will probably be in the space of aluminum and not in steel. Electric vehicles, because of the lighter weight, there has not been that much in composites, but Mahindra CIE has got a base of composites. We do supply composite parts to the tractor business. Maybe our quality needs to be up to make it acceptable quality for A-class services of cars. So we are consciously finding new opportunities where the electric vehicle business will take us. So it's aluminum, it's plastics, it's composites, and it's a migration away from the dependence on engine parts. So our next forging acquisition may not happen unless that forged components are going into wheels and hubs and transmission, and it does not focus on crankshafts and connecting rod that go inside an internal combustion engine. So are we due to pronounce our strategic plan by the end of this year? And I would say that the growth that you're seeing, you may not see a 67% growth that you've seen in EBITDA this year, but the 20% organic growth, I don't see that going away.
Wow. Okay, just one more small follow-up on that, Mr. Luthra. Wear an industry veteran's hat and tell us, would this be disruptive for the auto component industry, or because it will take slightly longer than what people might be thinking right now, companies by and large will adapt to the EV surge, as we call it?
See, from the beginning, I don't know the ability of other organizations to adapt, but anybody who has their own R&D capability and people who are building to print meaning the designs are provided by the OEMs and you're building to print, is not going to make it. If you have design and build, which is our philosophy been from right from the beginning, and we have own R&D and our own capability to substitute forged with light aluminum products or plastics and composites to substitute for stamping. It'll depend on your ability to innovate. It'll depend on your ability to improve your margins by having the control over the IP. Because most of the car manufacturers are going to be struggling to do the macro stuff, which is change the design of the car, change the transmission of the car, change the drive of the car from maybe internal combustion. I see hybrid coming before electric. And so they will be looking to farm out more and more R&D and IP development to suppliers. And that's why I think you will also see a consolidation of suppliers who have the ability to do all of that.
All right, Mr. Luthra, that's an illuminating
I don't know
glance.
if that answers your question.
No, in some ways it does. I'm sure that you can't get into more specifics nor tell us which companies stand, to compete hard with you. But thank you for an illuminating look into what the next 5 years may hold, as well as what the next 5 quarters may hold, as Niraj put to you. And thanks for joining us on BloombergQuint this morning.
Welcome, Menaka.
Have a nice day, sir. All right, that was interesting. Business, I thought, 2 key takeaways that he, is Mahindra CI is hoping to capitalize on some of the pain that other players in the sector are going through, and therefore seeing business shift to them and away from some of the other highly indebted, struggling auto component players, and positioning yourself. I think it was quite clear that the next acquisition will be keeping the EV space in mind, or at least towards that in that sense. So.
And even if it doesn't work out, it won't hurt them too much, because I think he referred to how the petrol combustion pocket is such a small component of their overall sales. If that gets disrupted, Mahindra CI will not get too bothered.
Dramatically hurt. But they look to be already re-engineering towards what the EV revolution may bring. So, yep, interesting conversation.
Should be interesting. Yes, indeed. By the way, just before we move on to the next voice on the show, just want to mark that it's all about pharma today. Maybe what Divi's did is getting this stocks float, but look at Aurobindo, Lupin, Sun Pharma, Cipla. These 4 are amongst the top 6 gainers on the index. So big moves there for the Nifty Pharma in the session today. Though Kenneth Andrade isn't quite gung-ho on pharma. He spoke to us on our series Alpha Moguls. He's betting on recently or decently leveraged companies making, according to him, it makes sense because they could be on a bit of a turnaround. These are his words, founder and chief investment officer of Old Bridge Capital, Kenneth Andrade. He spoke to us on our new series, which starts from today, which is Alpha Moguls. And Andrade says that companies with excess capacity stand to gain from a revival in demand, which is well and truly on its way.
All that I look for as far as the data that comes through is which companies actually have a low capacity utilization and push it forward. And today where we're actually sitting, I mean, I haven't seen these numbers with 2017 balance sheet. It's only gotten better over the last decade. Okay, and going into 2019, I think we'll have a very pristine looking corporate India's balance sheet. You're going towards debt equity, which will be close to its historical low. You've got capacity utilizations at 70%. You got a lot of output coming out still. And I think all of that, if you just quantitatively put it together, at the end it looks very good for end shareholders.
So money to be made in fractured balance sheets which are seeing repair. You would reckon that's the theme?
Reasonably leveraged companies, yes.
Reasonably leveraged companies. Infrastructure would form part of that, or no?
I mean, it's too broader.
Narrow it down for us.
Yes, it's too broad a category to look at. But
so narrow it down for us.
You will have any asset-intensive businesses coming back. I mean, capacity utilization is a function of the assets on the ground. The assets on the ground and demand coming back is basically capacity utilization is going up. Capacity utilization is going up, higher cash flow, which incrementally means lower debt. Okay, and you can put the math together.
Okay, let me ask you a pointed question, so to say. I'm not getting into a stock, but I'm just telling you a conversation that I had, for example, with 2 or 3 managements. One of them was Thermax, and they mentioned, while they have a large international presence as well in their order book, but they mentioned that they are seeing orders coming in from sectors which hitherto had not given orders. Fertilizers, for example, was one pocket that he mentioned about. And he mentioned that it will be a play of my capacity utilizations levels moving up. So would you believe that cap goods could be one pocket that could do that?
Yes.
Very
higher
few
capacity
players.
Utilization is equivalent to higher pricing at the end of the spectrum.
Okay.
Okay, so today we're only talking about higher capacity utilization, but once capacity utilization hits that 80% mark, and that's when companies start taking pricing, right? So if your fixed costs are in control, which most of these guys have it right now, your operating leverage in some of these businesses are large. Okay, commodities, engineering, infra businesses.
Okay, fair call. So that's a wide gamut as well. Two pockets which were considered gruesome, selectively companies are doing well. We've spoken about one, which is real estate. Two, aviation. Is there merit here?
It's a consolidated market, and capacities will only come in line with what demand is there. So barring a year or two where you will have surplus capacities on the ground, I think that industry is fairly, it almost looks like it's like an industry which some time back looked like cement.
Oh, interesting. Okay.
So a very consolidated market. Pricing is dictated by very few on the ground.
Yes.
Okay. And the domestic space looks nice.
And while it's difficult to predict the key input cost, but is there a sense that because crude may stay where it is or not really dramatically improve too much, that kind of gives a more predictable earnings cycle to these companies too?
So this will be one of the cycles where aviation will have to test out its ability to price inflationary costs into the market. Right. So it's also a function of demand, and if demand continues to be robust, okay, I think these guys will be able to pull it through.
Interesting.
This sector will be able to pull it through, yeah.
Okay. And within the broad basket of consumption, I'm kind of clubbing aviation as discretionary spend. Anything on the consumption, be it staples, discretionary or otherwise, that you believe could continue? It's a space that has really run its course, if you will, honestly ask me, but is there more steam left out here?
I think valuations are expensive out there, and growth out there could be a little back-ended because the kind of job creation that's happening in India is not the blue collar, white collar jobs that have been there. It's more very labor intensive jobs, so where the per capita incomes would not be significantly high. You won't see a disproportionate growth in per capita GDP, first to say. So I think that cycle could tend to be a little back-ended, the discretionary spends.
Of course, you can catch this entire conversation today at 11 a.m. on BloombergQuint.com. Well, that's interesting. A bunch of pockets that he spoke about. I'm just looking at the pockets that are doing well today, guys, before we move on to our next discussion. And guess what? Aside of pharma, it's PSUs. Every PSU name worth its salt is...
in the hope that the government will get out.
You never know. So while dredging is up 13%, yes, but look at the
After yesterday's 10% move.
After yesterday's 20% move, another 13%.
20% move, yes, sorry.
So another 13%. Hindustan Copper up 8% after the 10%.
In 2 days, it's worth 33% more.
Shipping Corporation in 2 days is worth 20% more. I don't know if Baltic Dry has gone up so much, but yeah, it's certainly doing well. MMTC, Moil, National Fertilizers, go down the list, and all of these companies have done well. BEL is the other one, but that's with reason, of course. They posted a fairly healthy set of numbers. I don't know what the stock is doing today, but let's just bring that stock up as well, because they had a fairly interesting quarter. The September quarter was very, very strong, with profits up 19% to 412 crore rupees. The revenue numbers weren't too bad either. To discuss the key highlights of the quarter gone by, joining us on the phone line is Chairman and Managing Director, M.V. Gautama. Good having you, Mr. Gautama. Thanks so much for joining in. How would you rate this quarter? The revenue growth, I thought, matched street expectations. The bottom line performance not too bad either. Is this a sign of things to come?
I hope for this financial year FY18, we will be expecting the similar growth in the next 2 quarters also.
You mean a 45% revenue growth for the next couple of quarters as well?
We are planning. At the end, I will put it like this, that our year-on-year growth, I expect it anywhere around 15% towards the end of the year.
15 or 50?
15. 50 cannot be there.
Well, you've done 45% in the quarter gone by.
It went through well because of the planning what we have taken care in the company in the last 3-4 quarters. And henceforth, we expect to perform our annual turnover sufficiently evenly spread across all the quarters. So our aim is at least achieve 40-45% by the first 2 quarters, so that the load on the last quarter comes down. So we are trying to ensure that our goods and services are spread all through the year instead of getting packed into the last quarter previously what it used to happen in Bharat Electronics.
Fair enough. Mr. Kathama, good morning. Can you tell us if there were any specific reasons for how you've been able to, or why you've been able to post such a big surge in revenue growth, 45%, and whether these reasons will continue into the next 2 quarters? So any particular project categories or order categories?
Yeah. This quarter, we have done fairly well in delivering the radars, the weapon locating radar, what we had on the order right now. For the entire year also, we have got orders for that project, and we will be delivering quite satisfactorily. Similarly, we have upgraded L-70 guns of Indian Army. The input supply of these guns happened quite satisfactorily in these 2 quarters, and hence we were able to meet the targets as we planned internally. Similarly, handheld thermal imagers, night vision devices, we were able to produce and meet the customers' needs. Incidentally, we got a surge requirement for these items in the last year. We were able to deliver in the last 2 quarters large numbers, and the remaining we'll be doing in the 3rd quarter also.
So you had an order inflow of 5,600 crores in the first half now. What will be the numbers for the next 2 quarters in your anticipation?
The big programs have not yet taken off. This is a little worry for me at this point of time. We are still negotiating with the committees formed by MOD regarding 7 squadrons of Akash, as well as LR SAM repeat order.
So Akash Mand was not part of this quarter's numbers.
Yes. We are yet to get the Akash order for 7 squadrons.
And you think that might happen in Q3 and Q4, sir?
It should happen. We have fairly resolved the issues that concerned the MOD's committee, and I hope they will take the case forward in the coming days, coming months. And already I can feel that it is getting delayed. For us to plan the deliveries next year, we are already lost more than 2 months of time. It will eat into my delivery plans for the next year.
So I have one quick last question, which is, if you did 5,600 crores in the first 2 quarters, what are you expecting to be the order inflow in the next 2 quarters, given some of the challenges you've already laid out in some of the big orders?
Yeah, my guesswork, based on the discussions, negotiations we have with the government, we indicated in the beginning that about 13,000 crores we will be able to get orders this year also. So I'm quite confident that we'll touch that figure.
All right.
Okay. We'll leave it at that, Mr. Gautama. Thanks so much for joining in and talking to us.
And we'll quickly move across to Godrej Consumer Products. Their numbers out as well. Vivek Gambhir, Managing Director of the company, joining us with a sense of what's happening behind the numbers. Vivek, good morning. Thanks for joining us. Apologize if we kept you waiting. I guess the first question is pertaining to the volume growth, 10% growth domestically. Are you saying that we are more or less back to where we were before all of these disruptions happened, where it was demonetization, GST? And is that true across channels, Vivek?
Good morning. The business has clearly shown a lot of resilience, and we are pleased with the robust, profitable growth that we have delivered. Clearly, our innovation-led approach, backed by relentless execution, seems to be working quite well. And we strongly believe that we are set up quite well to deliver an even stronger second half of the year. While we've been very pleased with our volume growth, in particular, soaps have done very well. There is a lot more opportunity to improve our performance in hair colors and insecticides. So in the second half of the year, we do believe that those 2 categories will fire more as well. So we should be able to sustain and improve our performance in the second half of the year going forward as well. In terms of the channel pickup, largely general trade and direct distribution and modern trade are back on track. Wholesale is about 80 to 85% there. There is still a little bit of a catch-up that wholesale, particularly in the eastern part of India, needs to do. But our hope is that by the end of this calendar year, so by December, all the channels should be back on track. And the good news is that so far, consumer offtakes have been quite steady. urban has been picking up quite nicely. We are yet to see a meaningful pickup in rural. While our rural business grew marginally ahead of urban, the potential for growth in rural is much higher. What seems to be the constraint is lack of adequate wage growth in rural. But I think we are hopeful that on the back of a relatively okay monsoon, along with MSP increases and the government focus on rural infrastructure, the second half of the year should augur well for rural growth as well.
So what do you think, Vivek, would be a reasonable range to expect in terms of volume growth? I'll come to the product categories in a minute, but just to close off the loop on rural and urban demand, in each of those segments, what would be a reasonable number to expect in terms of volume growth?
As you know, if you look at our performance in the last quarter, we delivered a 10% volume growth. This was on the back of a 9% growth in the same quarter the previous year. So the volume growth, and along with the 10% volume growth, we've delivered a 24% EBITDA growth. Our guess is this would probably be the best performance in the FMCG industry for this quarter. Certainly the potential is for us to deliver better than this. Hard for us to take an exact call as what that number should be, but given the way I think offtakes are improving and the way the channel is adjusting to a post-GST scenario, certainly our efforts will be to better this 10% volume growth in the second half of the year.
Vivek, good morning. Your best performance was in the soaps category. I believe you've benefited from the formalization prompted by both demonetization and GST to a large extent. Can you give us an idea of how much you've been able to improve your market share by, and what is the potential scope to continue improving that as these forces continue to play out in the economy?
The biggest reason for the growth in soaps was more at a category level, where the entire category has benefited from the price reductions that we have passed on to the consumers. So as the GST rates have gone down, we have taken price cuts of about 6 to 8%. That's really helped improve the performance on the soap category. Along with that, we have launched some very innovative marketing initiatives, expanded coverage in soaps to a few new states, and collectively all of this has helped us gain a certain amount of market share. But the soap numbers also need to be put into a context, which is the base quarter was quite poor, where our business had degrown by about 11%. And so a better way to look at the soap performance would be a 2-year CAGR, where the numbers have been a high single digit, because soap is a very penetrated category. Certainly our efforts will be to improve the performance going forward, but I expect soap growth to moderate in the next couple of quarters, and insecticides and hair color growth to pick up. And net, if you add these things together, we should be able to deliver a much stronger second half, but the portfolio mix could be slightly different.
And do you expect to announce new initiatives in both insecticides and hair color? Especially, I think in hair color, you had powder hair color that didn't perform very well for you. Can you take us through what some of those new initiatives would be and the costs attached to that, if we would see any commensurate impact on that side?
Clearly, I think powders has been an area of concern. Some of the slowdown in the powder segment was driven by a slower pickup in the wholesale side of things. Powders tends to be a fairly wholesale intensive and east dependent category, and that's where we face some challenges. So we have some tactical plans to try and get back some of the growth back in powders. Beyond that, the innovation agenda across insecticides and hair color is very exciting. I think for the last couple of quarters, we had been going a little bit slow just to see if the market environment improves. Now that we have enough confidence, we will dial up our innovation agenda. As far as marketing investments are concerned, we are quite comfortable with the range of ad spend. Our ad spend ranges between 11.5% to 12.5% of sales. Last quarter, it was 12.1%. If you compare our first half ad spends versus the previous first half in the previous year, it was 11.5%, went up to 12.1%. So we are very comfortable, and we will ensure that we adequately invest behind brand building. There is enough room in the P&L to be able to increase our ad spends and yet deliver better profitable growth.
Vivek, how are things shaping up on the input costs front? At a macro level, input costs starting to rise. What is it at your end, and are you confident that demand is strong enough for you to be able to pass it on as and when it happens?
For the next 3 or 4 months, I think we are quite comfortable with the kind of covers we have, particularly with regards to palm oil, which is one of the more volatile inputs that our soaps business relies on. Beyond that, we are remaining watchful as to what happens to crude, because crude is an indirect variable which impacts a fair amount of costs. So we will probably have to see in quarter 4. I think for quarter 3 we are okay. In quarter 4 we will have to see whether the input costs justify increasing prices. Also, the good thing is that by the quarter 4, a lot of our cost reduction projects typically start showing a lot more traction. So there is opportunities to further reduce costs, which will start showing up in the later part of the year. And then we'll try and take a call to see if we need to increase prices. But for the near term, the focus is on volume growth, tremendous opportunities there, and we'll keep on focused on that.
All right, Vivek. Thanks so much. Appreciate you taking the time to speak with us. That's Vivek Gambhir of Godrej Consumer.
Yeah, they had a good quarter, and I think volume growth's been very encouraging for all the reasons that he spelled out in soap. So let's see what the next half they do in terms of the categories that haven't done very well.
Yeah.
Okay, we're going to wrap it up then on Indian Open. We're already running a little late. The F&O show is waiting by for you, so make sure you stay tuned.